What's going on, guys? Just throwing together a quick update video. Another solid day once again. AMC actually formed a new local high today, and the tracking in the channel, the ascending channel, looks very, very good so far. And SPY is pushing the top end of the range, the local highs. I'll jump into SPY now, and we'll talk about that. So starting with the macro on SPY once again, descending broadening wedge for a year, breakout, retest, reclaim the ascending triangle, break out of the ascending triangle. The descending broadening wedge transitioned into an ascending triangle here. So from the retest of the wedge, you reclaim the triangle, break out of the triangle, gap up. See upside to 444, came down, bounced off the 20 EMA, and is now pushing the highs of this range once again. 66 days in a row closing over the 200 EMA, golden cross on the daily. Very bullish on SPY. SPY is going to be seeing all-time highs in the relatively near future, and short-term potentially expecting a pullback, and we can get into that now actually. Starting with the symmetry here, I've gone over this numerous times by now, but I'll do it really quick again. The blue is your middle where you have your lowest low. You have one break above the ascending triangle here to retest the wedge. Coming into the red boxes on both sides now, you come down and break below this horizontal line at 380 on both sides. On the left, you came a little bit lower than on the right to retest the wedge to the downside once again. From there, you bounce, reject 418 on the dot in both. And from that 418 rejection, you come down to 380 on the dot in both greens. And then you bounce from there, hit 430 three times before breaking through, hit 430 three times before breaking through. Next stop 438, reject really fast there, and then pop through that. Same over here, rejected 438, broke through that. We were looking for 450 as far as the symmetry went. Just speaking strictly in terms of symmetry, we were looking for 450. Once we broke 438, we didn't get that. We got 444 roughly, and then that was where we got rejected. And then I mentioned because we were looking for 450, and then from there a retracement to 438 to establish support before moving higher. Having only came up to 444, I said you could expect to come a little bit lower than 438, roughly 429 to 430 range, and that's pretty much what happened. We came down to 431, found a bounce there, and found a new local high on Friday, and was pretty much sideways today in that range up there. And if you remember me saying that this move is very similar looking on both sides, the symmetry is perfect on SPY. It's absolutely perfect. And so this move right here would be comparable to right here as far as the symmetry goes. And from the 450 rejection, you come down, find support, and you bounce slightly higher right here. And that's exactly what we've done so far. So we came up to 444, rejected, came down, formed support, bounced slightly higher, and now we have a couple wicks slightly higher than the previous high in this range here. Exactly what you saw over here. So it is possible from here we pull back one more time to the middle of the range before moving higher, and what that would look like is a pullback to 438 roughly, which would be the middle of this range before moving higher. So it's possible that we just start ripping to the upside from here, and it's also possible that we get that move down to 438, establish support there before moving higher. Nonetheless, the symmetry here is perfect, and this looks very good. Extremely bullish on SPY. Once again, touching on SPY daily because both times AMC squeezed, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing here. And from October 2022 until today, SPY has done nothing but form higher highs and higher lows to the upside and break two macro patterns, the descending broadening wedge and the ascending triangle to the upside. Has not seen the 200 EMA in over 2 months now, and golden cross on the daily about a month ago. So this looks extremely bullish. Very, very good. We're expecting a squeeze on AMC and the rest of the meme basket. So seeing SPY round to the upside like this is exactly what we want to see. So again, the uptrend that we have here, this would have been the end of the ascending triangle where you fake out, come down to support one more time before breaking out, and then you retest. And then we're just pretty much riding this bull trend up to 444 where we found the rejection, came down, gap below the bull trend, and then spent a week in this descending channel here. Broke that to the upside and formed a new local high on Friday, a new 52-week high once again on SPY. And then today, relatively sideways in this range. So once again, what we can expect next for SPY is either we come down to 438 one last time and find support there and move higher from there, or we just break to the upside here. So overall, very bullish on SPY. Jumping into AMC, starting with the macro here, where you have this descending trend line from 2017 until you squeeze in January 2021. which is comparable to this descending trend line that we have here from the breakdown in the flag in November from the June highs. So it's actually a very similar move before. I haven't really touched on this, but you have this V move here, which would be the equivalent to this V move here, and then you come down from that and actually gap down right here, and we have the same exact thing right here. So from the top of the V, come down gap down here, and then you play this pattern out, same pattern too that played out here. I can get into that. I'm not going to do it in this video, but this pattern is the exact same. And then from the end of that pattern, that's when you break down to the green. So coming down to the green, it's more or less a W. Same over here. The red is more or less a cup. Same over here. And then the blue, you come down, bounce up, come all the way down, curl up towards the end. So again, blue, come down, bounce up, come all the way down, curl up towards the end before dropping down to this flat portion here. So again, this descending trend line has no touch points on it at all. Same over here. Nothing is touching the trend line here. All the way down to the end. So macro looks perfect. Jumping into this from a different perspective now, I removed the colored boxes from the flat portion, makes it a little bit more clear. So just throwing some lines on here. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Takes you to the end of the blue in both macro perspectives. From there, you drop down to the flat portion. Same on both sides, where you have 1, 2, 3 touches on the bottom, and you squeeze from that third touch. You form an uptrend from there, and you break the triangle and squeeze. So that's what we're going to be looking for, where we have 1, 2. This would have been our third bottom. I mentioned before this actually happened, we were looking for a slightly lower low than the April lows that we saw here, but I also said we didn't have to have a lower low. We didn't get a lower low. We bottomed at 401. 7 wicks on the 1 hour chart, the 401. Could not break sub $4. So it looks like the bottom's in here. It looks like this was our third bottom. Again, 1, 2, 3 bottoms, 1, 2, 3 bottoms. So this looks very, very good. And from that third bottom, I said we're going to be forming an uptrend, and that uptrend is going to break us out of the triangle, and that breakout of the triangle will be taking us to our squeeze. Once again, my price targets, $140 based off of macro Fibonacci extensions. That's my conservative price target. Anything past $200, I said in my last video, you'd be in MOAS territory. So again, my 140 price target is not including the reverse split. It's not accounting for the reverse split. That's if we squeeze today, pre-reverse split. If we squeeze right now, $140 based off macro Fibonacci extensions. But I am leaning more towards we're going to MOAS now. This squeeze from this breakout of the triangle here, in my opinion, will be the MOAS. And it's not just AMC, it's the rest of the meme basket, GameStop, Bed Bath Beyond, the whole story. The whole meme basket is more than likely going to MOAS. Price targets are going to differ for each stock in the meme basket. But yeah, I'm leaning more MOAS than anything, and that is pretty much that. Now jumping into the micro now, and again with the micro, what we're going to be doing is looking at the flat portion on both sides. So we're going to be looking at the orange, purple, and blue, the flat portion from the breakdown in this blue here, and the orange, purple, and blue. Same thing, the flat portion on both sides. So that's what we're going to be zooming in now on the micro. And once again, in the orange, you have a W, you have chop at the bottom here, which brings you back up to the top here. Same thing over here, it's a W. Up to the bottom, you have chop here at the bottom. Again, support resistance of the current cycle is a lot tighter than it was in January 2021. So the chop down here is a lot tighter, but nonetheless, takes you to the top. Come into the purple now, which is more or less a cup. You have a higher high on the right. Same thing over here is a cup, higher high on the right. And then the blue is a W. Once again, a very symmetrical move as well, where you come down, break below this horizontal line here, pop above it, and you get your second bottom there. And same thing over here, break below the horizontal line, pop above it, and you get your second bottom. From the second bottom, you come into the tri-peak iteration. Same on both sides, you get the tri-peak, and then from the third peak of the tri-peak, you come down one last time to your third bottom. So from that third bottom, you form an uptrend. It's an ascending channel, is the uptrend you form here, and that breaks you out of the macro, and it takes you to the squeeze. So that's what we're going to be looking for now. Once again, the date range on the micro, the flat portion here, pre-January 2021 squeeze, from the start of this until your squeeze day, January 27th, 342 days. And from the start of it until your third bottom was 319 days. So 320 days. So from your third bottom until your peak was 22 days roughly. Over here, from the start of it to our third bottom, 204 days. So once again, we're tracking this much faster. From the start of this to your third bottom, January 2021 cycle, 320 days. From the start of it to the third bottom here, 204 days. And once again, from the third bottom, 22 days from the third bottom until you peak. and we're on day 6 now from our third bottom, and I mentioned we're tracking this faster, so things could get parabolic here very quickly. And this move is looking very symmetrical now, where we would have just came down to the bottom equivalent to this. So the next thing that we'd be expecting is pretty much a straight line, and then you would get this W move with the tri-peak in the middle. And it would play out as a symmetrical move, and this would break us out of the triangle and take us to our squeeze. So that is pretty much that. Now, jumping into the same exact thing that I just showed you, except this is the area chart now. So this is the exact same thing I just showed you on the micro. The same exact thing I just showed you here. These are candles. Now we're jumping into an area chart, and it's pretty much the same exact thing here. I just like the way this looks a little bit better. So the orange, you come down, bounce up, come to the bottom of the chop here. Same thing over here. Come down, bounce up, come to the bottom of the chop here, and then you get 3 peaks, and that's your first bottom. So it's your first bottom in the January 2021 cycle, first bottom in the current cycle. From that, you bounce up, you get 3 peaks, each peak higher than the last, so increasing height on each peak here, and we have the exact same thing here. And then from there, you come down, and this would take you into the blue box now, where you break below the horizontal line here, bounce above it, and you get your second bottom. Exact same thing over here. Break below the horizontal line, bounce above it, you get your second bottom, and from that second bottom you get the tri-peak, same on both sides, and then from the third peak of the tri-peak you come down one last time to your third bottom, same here, and then you form the uptrend that breaks you out of the triangle and takes you to your squeeze. Again, we're tracking this much faster, and the reason we're tracking this much faster is actually because of the volume. There's more volume here. So from the start of this until your third bottom, 267 million. And then from the start of this to your third bottom is 68 million. So a lot more volume in the current cycle than what we saw back here, and that will be accounting for the speed here. That's why we're tracking this faster. There's more volume. If you remember me saying in my previous videos that the volume would be relative to the speed, so the more volume that you're seeing, it's going to be increasing speed of the movement of the macro. So this looks very good. It looks perfect, and we are tracking this faster, which is a good thing. So now, just really quickly, we're going to be getting into the tracking on the micro. And the tracking, so far, it looks perfect. But, you know, tracking on the micro can be very tricky. So just take this with a grain of salt. So what we have here, I showed this when we got the pop. I believe it was last Wednesday. We got that 10% move end of day. And I said that it looks like this was our bottom here. We bottomed multiple times at 401 and could not break it. 401, perfect wicks to 401, could not break 401, and then we got the reaction off of the bottom. I said we're going to be looking for a reaction off the bottom on volume, and we got the exact same thing, and then that would be the equivalent to this here. So from this pop here, I said we're going to be tracking this channel now. So getting into this, and this would have been on Friday. So I said all the markers are the same on both sides. You have the red circle here, same as here, and then you come to your bottom. Excuse me. You form your bottom. It's a very cup-like move, and you bottom out there, same as here, and then we got the reaction off right here, which you pretty much find the top resistance of the channel at that pop. So I drew this on early, and then I said the volume profile matches, which it does. You get the volume spike here, just like you saw back here, very high volume relative to what you saw previously, and the exact same thing here. And then from there, we come down and we have a double bottom with a higher low on the right, and we have the exact same thing here, double bottom with a higher low on the right, and then from there you bounce up again to the middle of the range indicated by the blue circle here, and then from there you double bottom again with a higher low on the right once again, and that's exactly what we got here. And then we found a bounce off, and then this is where we left off Friday. So I said we left off here on Friday, which would have been approximately right here, so we would have been looking for this pop right here, and this pop actually brings you slightly higher than the green circle, and that is exactly what happened today. So getting into this now updated, again, the markers are the exact same. I have the volume profiles matching here. I have the rectangles around the volume profiles, so we're seeing a very similar movement in the volume profile, and the movement in the channel looks very similar as well. We actually left off right here last week on Friday, and we got the pop higher than the green here. So this looks, actually it looks perfect so far. And then we came down from that, and now what we're going to be expecting is, assuming that all the downside is in here, maybe there's a few more cents of downside, and we're going to be more than likely forming a double top here now, and it shouldn't be higher than what we saw. Can be, it's never going to be perfect, but more likely than not, the next move we're going to see is another move to the upside here, double top, should be slightly lower actually than 460. 460 was high of the day today. So we might have a few more cents of downside, and then you find a bounce and a very like roundish top. That's what we're going to be looking for next. And then from there, we're going to get another higher peak, and we'll just take it one day at a time. So that's what we're going to be looking for next. Just pulling this up side by side. Just give me 1 second. So this would have been on Friday. So we would have ended the day roughly right here and looking for this pop here, which would have been higher than the green. That's where we would have left off on Friday, and that's exactly what we got today. So this is updated on the right. We got that pop higher than the green today, and then we came down from that. It looks perfect so far. The next thing we're going to be looking for is a double top, roughly back in the 460 range, and then we would come down one more time, form a higher low, and then we would get the rest of this upside, which would take us more than likely back to the top of the channel. So we'll just take this one day at a time. So far, so good. It looks perfect. The volume profile looks perfect. Macro looks perfect. Everything looks good. SPY is very bullish. Absolutely no complaints. One last thing before I end the video here. And this would be showing this is the daily chart of the January 2021 cycle on the left and the current cycle on the right. I mentioned multiple times already that the gap movements here marked by these flags are the exact same thing. So the gaps are in the exact same spot in each iteration, and we would have already got the tri-peak and came down to the third bottom here, and now we're in this uptrend. As a matter of fact, the daily EMAs are perfect as well. Just looking at the 20 here in the orange, you come down, you're under the 50 pretty much the whole time, and then you have, it's more like a wave here and a higher high on the right coming into the purple. And you have the same thing here. It's under the 50 the whole time, and then you get this wave move with a higher high on the right and the 20 EMA. And from there, where the purple box ends, you actually break below the 50 once again, as you do here. And then you're riding under the 50 here, coming through this to your first bottom. You actually cross in the tri-peak, which we did here. The 20 crosses the 50 in the tri-peak, and then it crosses back to the downside again, which is what happened back here. And then theoretically, and I'm not saying this is for sure, but the next time the 20 EMA crosses the 50 to the upside, that should be while we're squeezing. So that's what we're going to be looking for now as far as the EMAs go. We're going to be looking for the 20 EMA crossing the 50. So again, in this blue box here, so we'll just start over. So from the beginning of the orange, you're under the 50 the whole time. You cross it, coming into the purple, and then you come down, and then you come higher over the 50 again. So the exact same thing here. And then after that, into the blue, you cross the 50 to the downside. You break above it slightly in the middle of the tri-peak, and then you come back below it again. So same thing here, broke above it in the tri-peak, and then came back below it again. The next time the 20 EMA crosses the 50 EMA on the daily, we should be squeezing or about to squeeze. So that's what I'm going to be looking for as far as the daily EMAs go. Again, the gap movements here are identical as well. This looks very good. I have no complaints. Everything looks perfect. I'm not going to drag this video out. So far, so good. Really, I just wanted to show this, the updated tracking on the micro. Everything else, nothing really changed. Very repetitive, but it is what it is. So I really just wanted to show this today, the updated tracking on the micro. We got a half day today, so nothing really too exciting. No market tomorrow either, so I'll just leave you guys with this. So far, so good. The tracking on the micro looks perfect. Next thing we're going to be looking for is a double top back in that 460 range. More or less, it's going to look like this too, a roundish top here before you come back down, form a higher low, and then from there we should actually form another local high, which would be the equivalent to this move here, back to the top of the channel. And then from there, we would expect downside and potentially breaking below the bottom end of the channel here, and then playing all this out. So one day at a time. So far, so good. The tracking on the micro looks perfect. Everything looks good. Again, SPY rallying to the upside. Exactly what we saw January and June when AMC was squeezing. SPY is unstoppable. Looks very, very strong, very bullish there. The macro on AMC looks perfect. We would be in this flat portion now, having just hit our third bottom, just like you did back here, forming the uptrend, which should break you out of the triangle. And that breakout from the triangle will take us to our squeeze, which would more than likely be the MOS. And that is pretty much it. Everything looks good. Micro looks perfect. The tracking so far looks perfect. The daily EMAs look perfect. The gaps are the exact same on the daily as well. I have no complaints. So one day at a time, and No market tomorrow, so more than likely I'll be catching you guys on Wednesday. Everybody enjoy your 4th of July, and I'll catch you in the next one.